Welcome to the recorded workshop session for the Accounting Distance module.
To the last segment of our class for today. All right, so what we're going to do now is we really see how profit is being determined. All right, we're going to look at how profit is determined in a company. All right, so let's see. Oh, yeah. Go down, go down, go down, go down. Yeah, so here. Okay, so here we are working out how profit is determined in a company. All right, so what the question really requires us is to plug the numbers in the shaded area. All right, is to plug in the numbers in the shaded area. But before we can do that, let's just make sense of everything, of what these accounts are all of, the purposes of these accounts. All right, so remember your trading account. All right, so when you trade, we're talking about buying and selling. That's trading. It's buying and selling. So in the trading account, we are talking about two things basically. We are talking about sales that we have made. And then we are talking about the cost. All right, so in other words, and then in accounting, we call that cost of sales. All right, so what we are saying is that if we are selling, so our sales will be what we got from selling goods. So if we are getting 100 Rand, let's say 150 as sales, we ask ourselves, okay, so if we have sold goods for 150, how much did those goods actually cost us? All right, and that we call cost of sales. So if the goods cost us 100 Rand, then it means we have made a gain of 50 Rands. All right, so in accounting, we call this gross profit. All right, and when we dealt with salary, I've already warned you that when you see the word gross, it means that something will be deducted. All right, so because here we are talking about if the goods that we're selling cost us 100 Rand and then we made this, we have profit. But remember, we have also other expenses in the business that we'll have to deduct. The delivery expenses, the telephone expenses. So this, we say it's gross because it's before we take the expenses, the operating expenses of the business into account. So the purpose of the trading account is to calculate the gross profit. All right, so the purpose of the trading account is to calculate gross profit. So that's actually the main purpose of this trading account. Remember, it is to calculate the gross profit. And we know that the gross profit equals to sales minus cost of sales. All right, so here they have given us shaded areas, all right, that we need to complete. All right, so you've got a shaded area here for sales. So for sales, the amount will be given. We just have to go up and look at sales. All right, so look at that. So we have sales. Oh, but look at that. We got sales returns. Interesting. All right, because what it means is we can't put this amount only as sales. Because if you sold goods and you made 150,000, but other customers have returned goods worth so much, so it means that this sales is as if they have not happened. So you must deduct these returns from the sales. All right, so that's why they leave it as a shaded figure, because they know that the students are going to be confused by that. Okay, so let's work out this amount. So we are going to say 150,000, our sales is equal to 150,000 minus 3525. Okay, so let's calculate it. So we got 150,000 minus 3525. So that's the amount, that's the figure we're going to put there, 146,475. So you're going to say, oh, sorry. So it's actually right on the question. So you're going to say here, 146,475. So then that will be our sales. All right, so remember we said this is sales minus sales returns. Okay, so our profit, and that is actually our gross profit. Remember I said our profit is just the sales minus cost of sales. So we can immediately calculate it. Okay, so what is our gross profit? It's 146,475 minus 122,333.4. So our gross profit is 24141, 24141.60. So that's our gross profit. All right, so in this account you just needed to do two things. Put your sales figure, which is your sales minus sales returns, and minus the cost of sales. There you go. You've got your gross profit of 24141.60. So you are done with the trading account. All right, so I'm just going to have to cancel this because they actually move with our document. Okay, so let's go for it. Okay, so we come to the profit and loss. All right, so the purpose really of profit and loss is to work out the net profit. So the trading account is where we determine the gross profit, but here the purpose is to work out the net profit. Okay, so the net profit. So your net profit basically is equal to the gross profit that you got in your trading account minus plus other income. All right, so your gross profit, so this net profit will be equal to gross profit that you got from that we have calculated, plus other income. Okay, so as you can remember, gross profit only involves the income we got from sales, because we say gross profit equals to the sales minus cost of sales. So that sales represents the income that we're getting from selling goods or providing services. But we know that the business can also get money in different other ways. All right, they can rent their property, they can invest their money at the bank. All right, so that will be income to the business. So we must add other income. All right, and then we must subtract expenses. So your gross profit plus other income minus expenses will be equal to the net profit. All right, remember, it's gross profit plus other income minus expenses. All right, so now they've got shaded areas that you're going to fill. Okay, so the very first number that you're going to put on the credit side of your account is your gross profit that you have calculated there. So what you're going to say, you're going to show that this gross profit came from trading account. So you're going to say trading account. Okay, so, and then you go, I think maybe the answer could still be here. Okay, fantastic. So the number is still here. So the shaded area, you are indicating the gross profit you got from the trading account. So you're going to say 24141.6. 24141.60. Okay, so that's your gross profit. That's the number you start with. Okay. And then, so remember how these accounts actually work, because your profit and loss is typically an income account, so it increases on the credit, so it decreases on the debit. All right. So I just want us to work out this quickly. So we have our trading account, and then we put our gross profit, which is the first thing in your profit and loss account. But they also have gaps here for F, for E, and for G. All right, so the commission will be up there. So let's go get the commission from up there. So let's say commission. All right, so you see we've got commission received. Commission received is 3210. So let's go back. Let's go. Let's take it up a little bit. Let's try to align this with here. Okay, that's fine. So it's 3210.
Yes, 3210.
Okay, so 3210 because this is given. Okay, so now they've got a shaded area for telephone. So let's go get the telephone. So where's the telephone? 2850. So we go back. Okay, so it's 2450. 2850. Okay, so you're done. Yeah, so it's a balancing figure. Okay, so you are basically done. So when you have done this, you are done, because this, the bottom ones basically represent the totals of these two columns. The one which is referred to as capital is basically the net profit that you are calculating. All right, and it works out according to what we're saying, because what we're saying is that the net profit equals to gross profit, which is the trading account plus other income. So these are your other income minus your expenses, and all these are your expenses. So firstly, let's complete this one by just adding up the totals. So we're going to say, so we start with this side. So you're going to say 24141.6 plus 7005 plus 1455 plus 3210 plus 1170 equals to, so that's our total. So we're going to plug them here. So you're going to say 36989 81.6. Okay, so we're going to say 36 981.6. So that's our total. So the total, when we do the accounts, we put the same total both sides. Okay, we put it both sides, and then what we do is then once we have calculated the capital, the net profit, we're going to put here on capital. So how we calculate it, we say we take gross profit, add other income, we minus expenses. So all these are your expenses. So it's easy. So what we do is, because your trading account, your gross profit plus your other income are equal to this. So it means you already have these two. So all that you have to do is minus the expenses on that side. So we can just minus the expenses because this is the sum of trading account plus your other income, your gross profit plus other income. So you minus expenses. 11,850. Okay, minus 4,815. Okay, minus 6,850. Okay, so 6,840 minus 2,850 minus 1,965 1,965 minus 1,620 minus 1,005 minus 1,455 minus 1,740, okay, minus 345, then that is your net profit. So it means that for the whole period, your business actually has gained 2496.60. All right, when anyone wants to know how much profit did your business make for the period, you'll say 2496.60. So that's basically how you fill up the blends. So what we're saying is that in the profit and loss account, you are determining your net profit, whereas in the trading account above, you are determining your gross profit. So I hope that has made sense. So remember, if you want to contact me, you are always at liberty. All right, and now you are moving towards the exams, so I advise you to work very hard. All right, some of you have done very well in the assignment, but you must not let that actually make you a hard worker. So you must continue to work very hard so that you can actually pass this course. So I hope you have enjoyed this workshop just as I did. All right, have a good week. All right, thank you.
Thank you.